Thanks for joining me this Friday, the 10th of October. I'm Grady, Senior Market Analyst with Bell Direct. What a wild week we had on markets, with investors questioning the sustainability of profit growth for AI giants after Oracle revealed slimmer margins in its AI business than were first expected. The US government shutdown entered a second week. The EU looked to impose tariffs on steel imports into the region, and gold soared past $4,000 per ounce for the first time in history. Let's dive into the tailwinds behind the gold rally, just how far it can run, and some potential investment opportunities in the gold space to consider in FY26. Gold continues to shine as a standout performer in global markets at the moment, and several powerful tailwinds suggest that its rally still has some room to run. Central banks around the world are driving a historic surge in demand, accumulating bullion at record levels to diversify reserves away from the US dollar. This structural shift in reserve management is reinforcing gold's role as a neutral store of value amid increasing distrust in fiat currencies and broader geopolitical instability. Meanwhile, expectations of rate cuts in the US are fueling further momentum. With inflation showing signs of cooling and economic data pointing to a possible slowdown, the Federal Reserve may continue its pivot from tightening stance after its first rate cut of 2025 was handed down by America's central bank in September. Lower interest rates reduce the opportunity cost of holding non-yielding assets like gold, making it more attractive to both institutional and retail investors. In parallel, macroeconomic uncertainty from US fiscal challenges to slowing global growth continues to push investors towards safe haven assets like gold. Another key dynamic supporting the rally is the growing dislocation between equity valuations and fundamentals. Key stocks appear stretched in valuation, and the risk of a correction is driving more capital into tangible, historically reliable assets like gold. Elevated geopolitical tensions, whether in the European Union, the Middle East, or the southern China Sea, are also heightening risk aversion, further strengthening gold's appeal to many investors. While the gold price soared over $4,000 this week for the first time ever, we noticed some heavy hitting producers like Northern Star Resources, ASX, NST, Newmont, NEM, and Ramelius Resources, RMS, dipped midweek as investors took the opportunity to take some profits off the table in the short term, rather than the sell-off being a shift in fundamentals. These stocks have had a strong run, and some consolidation is only natural. Importantly, many miners are actively winding down or even closing their hedge books to maximise exposure to spot prices, a bullish sign that shows their confidence in sustained higher gold prices is prolonged. With the right conditions in place and miners positioning themselves to capitalise on the spot price, the gold rally clearly still has some meaningful upside from both a macroeconomic and sector-specific standpoint. At the recent Resources Rising Stars conference on the Gold Coast, I spoke to some emerging names in the gold sector that may be of interest to you in FY26. Now, for our investors who may not be familiar with the Saturn Metals story, can you give us a quick overview of what the company does?
Yep, gold company, Western Australia, been an explorer, now a developer. 2.24 million ounces and a pre-feasibility out very soon, which I think will present a very positive picture of our future.
For our investors who might not know the Indiana story, can you tell us about the company?
Sure, thanks Grady. So Indiana, we've got a dominant land position in the Central Gawler Craton of South Australia.
Yeah.
It's a really exciting gold project. We've got over 5,000 square kilometres of tenure, so that's a massive, massive footprint in a really highly prospective region. Indiana's had it's been around for many, many years. Some of your viewers may have known Indiana from when we were in Africa. We had a project there. Our cash position is significant from the result of a settlement with Tanzania. So that's all part in the past, and now we're really focused just on the exploration of the gold, which is fantastic.
For our investors who aren't aware of the Trek journey, can you tell us about the company and what you've been up to?
Absolutely. So Trek Metals, we're a junior explorer looking for gold in Western Australia, and we're focused. The strategy is that we're a frontier explorer, really looking for game-changing deposits, and I believe that we've got an absolute cracker in our Christmas Creek project in the Kimberley region of Western Australia at the moment.
Locally, from Monday to Thursday, the ASX 200 posted a 0.27% gain as a materials surge offset weakness among discretionary and tech stocks this week. The winning stocks on the ASX 200 were led by DroneShield, soaring 27.22%, while Eagers Automotive gained 19.32% and Linus Rare Earths added 17.65%. And on the losing end, GQG Partners fell 8.81% and Catalyst Metals ended the week down 8.73%. On the broader market index, the All Ords rose 0.4% this week as Ioneer soared 57.81%, while Findi tumbled 24.4% at the other end of the market. The most traded stocks by Bell Direct clients this week were DroneShield, Dateline Resources and Northern Star Resources. Clients also bought into CSL, Washington H. Soul Pattinson, while taking profits from BHP, WAM Capital, European Lithium, Linus Rare Earths and Westpac. And the most traded ETFs by our clients this week were led by Vanguard Australian Shares Index ETF, Global X Physical Gold ETF and iShares S&P 500 AUD ETF. On the economic calendar front next week, we may see investors react to NAB business confidence data for September out on Tuesday, with the forecast of a lift in business confidence, while the latest RBA meeting minutes are also out on Tuesday, which will give insight into the RBA's rate outlook moving forward. It is also a big week next week on the data front for China, with trade balance data out on Monday and the country's inflation rate for September out on Wednesday. It's a big week with a data dump in the US as well throughout the week, with key inflation, PPI, retail sales, building permits and housing starts data in the US also out throughout the week. And that's all for this Friday. I hope you have a wonderful weekend. And as always, happy investing.